Good day traders, welcome back by a new YouTube video. In this video, I'm gonna take you with me about US30 trading. Okay, US30. Got a lot of questions about it. Kev, do a new video about US30. So we'll do that today. I'm gonna give you my approach, my thoughts about US30 and how I trade it. How do I trade it? Which strategy I apply on this great asset? US30 is known as a great asset. It has large ranges, large daily, weekly ranges that moves quite a lot, on daily basis. So this is also why a lot of traders, individuals from all across the globe are a big fan of trading this asset. It can give you insane returns. It really does. As long as you manage your risk, of course, I can not tell that enough, but that is one pretty important thing. We're looking to US30 right in front of you on the 4H chart. I like to start off from a higher time frame perspective and scale that down to a lower time frame, for my entries and for my proper risk to rewards. Uh, let's start off. If we checking out the 4H time frame, you can see that price is pretty rangy at this moment. You have three type of market conditions. Okay, it's uptrending with more buyers than sellers. It's downtrending with more sellers than buyers, or it's ranging. Consolidation can be a new market phase depending on where we are in the market. So that's consolidation, ranging market. Okay, so you need to be adapt for change in any market conditions. Okay, the 4H time frame right in front of you, like I said. If we moving to the higher time frames, for example, daily, weekly, you can see that US30 is overall still in a big uptrend, from weekly perspective. Well, a thing that I like to do, first of all, is mapping out my weekly and daily levels, okay? My liquidity points in the market. Easy as that, because you can see that price will 90 to 95% of the time will heavily react on that daily, weekly 4H levels. Okay, liquidity points, higher time frame levels. For example, you can see that happened right here. This was a weekly / daily point, and price react heavily on it. Okay, if we let's do it as simple as possible. We will map out four important levels. Okay, so this was a weekly / daily point. Checking out daily, you can see there was a daily level as well. From a weekly perspective, you can see that the price greater than low right here. We have an highest point right here. And we have another level right here. Okay. Right here. Okay. Now we have four levels in front of you. And you can see how price trades within between these levels. Okay. So these are your most four important points at this point in the markets. Okay, if you scale down to the lower time frame, you can see that this is also matching up nicely from a daily perspective. Even on the 4H, it's great. So you can see that US30 is pretty well respecting those levels. Okay, those simple highs and lows in your markets. Okay, if you scale that down to even a lower time frame, for 4H, for example, you can see we have highlighted this entire range where price is trading in. Okay, within those levels, you will find buyers and sellers levels, supply and demand. That is what I teach in the education as well. You find your supply and demand areas. I will highlight two important levels. For now, it's the consolidation ranging market in overall buyers market on the weekly / daily time frame. So we will see how this will develop. But as trader, you really need to adapt for change. So you need to be ready for a heavy trending up market, or a downtrending market, sellers, or a market like this. Because price can be ranging for pretty well most of the time. Especially US30, this asset has nice ranges, but you need to understand those ranges. And this is why I always start off from a higher time frame, to understand the range where we are trading in. Are we a buyers? Are we in a seller's market? Are we in a ranging market? It's important. Okay, around this edge, 33,800 round number, institutional number, straightforward. You can find the low right here. Okay. If you're mapping out this level right here, so this is a 4H1H low. You can see we pinpointed that weekly daily level. We spike it through that level, and we reverse to the upside again to fill that entire range with overall buying power right here. But there's a reason why price reversed at this level. I agree, it were lows, like I explained it, but there is also a pretty important level right here. This is an institutional level, 33,800 round number, around 3,400, which is equal on a round number. You can see there is an demand level right here downstairs. So that is the most important thing. You need to understand within those ranges your supply and demand areas to trade based off. You cannot only trade because it's hitting a low or a high. Levels are strong, but I like to get multiple confirmations in my trading. So you can see that we have a demand level right here. Okay, and we have a level of supply up front. Supply is always up front, and demand is always below. Okay, and levels are pretty strong, especially if they are on an edge of the market on a low or high. So from a simple approach, you can see that price hitting these levels, hitting those highs. We see a nice liquidity spike, and you will find out that this was your first opportunity to sell. Okay, and you had a maximum target like this for your potential short, because we're hitting that high level. It was confirmed by a supply zone. We had a nice liquidity spikes on the lower time frames. If you can see that right here, we had a nice spike within these levels, and this was your first opportunity to sell. Okay, so we had three confirmations. That high was tapped, weekly daily high. It was confirmed by a supply zone, and we have a nice grab of orders around this edge, a liquidity grab. That is how I call it. And criteria of a liquidity grab are a deep spike within those levels, where a lot of retail traders get trapped. Simple as that. 95% of these traders get trapped, and the price reverse. Okay, so everyone think, okay, overall buyers right here are agree, but at some point price need to pull back. Okay, they need to those buy orders get filled, and after that new short orders come in, and that's where price will reverse. Pretty simple approach, but this is how I see it in a consolidation market like this. You can also confirm that for example, with a break of structure right here. If we draw a line right here, you can see that we had that consolidation within this level right here. You can see the price grab all the liquidity and push to the downside. Okay, so that could be your first short order in this market conditions. Okay, if we map out the higher time frame, we see an equal scenario happening right here for a potential long position. Not a perfect stop losses, but for example, okay, this could be your first scenario. Some traders will decide to exit the trade mid-range. Mid-range. That could be an opportunity, but this is the maximum target you could write it. Okay, so you have multiple options right here. Okay, you had a long right here, your second long could be here, and your third long could be here. Market has always opportunities. It's so super important to understand where you are in the market, in terms of price ranges, price reading, how is price trade around this edge, and especially from these edges. I prefer to trade from those edges, that liquidity points, and be pending. In my last gold video, I talked about it as well, and I have almost the same approach on US30. Only US30 is less wiki than gold, for example. USD gold, um, as known as a lot of liquidity spikes, it like to spike deeply within those levels, and US30 is a little bit more straightforward. So that is why also I do enjoy trading it. It really doesn't matter for me. Are we in an uptrend? Are we in a downtrend? Is it rangy? There are enough opportunities, especially if you check out those ranges. And this was a nice setting right here. You can see that we are trading around 35 till 34 level, which is a great range to trade off. And you have multiple opportunities if you are patient enough to see how price uh, trades around these edges. So very simple video, nothing too difficult. Um, Explaining those supply and demand areas, explaining those lows and highs, depending on those liquidity moves. Simple as that. Of course, take structure in consideration. I'm not a big fan of indicators that much. We do use a few indicators. For example, falling profile is a nice tool to get a confluence within your trading, and that is not based off a thing that I trade off, but you can apply it, more as a confluence. Okay, so as an extra confluence in my trading, most of the time I have especially 2-3 confirmations before I hit the buy or sell button. Okay, because as trader you want to put yourself in the best position possible. Simple as that. Another tip I also want to give you, seeing a lot of traders trading a lot of different pairs, currency pairs or assets. It's all possible. Don't understand me wrong, but myself, I do like to enjoy a few assets. For example, gold, US30, and pound yen. Top three for me. Most of the time, I trade 2 assets a week, but that's my fixed list. And I know this assets pretty well because I'm trading it for quite a long time, and you're gonna recognize patterns. For example, US30 less wiki, gold really wiki, uh, pound yen also pretty aggressive, big pip range, stuff like that. Anyway, I hope this video was helpful. How to trade US30, most simple approach possible. Enjoy it. Hit the subscribe button below, and I see you by the next video. Ciao, much love.